What is fintech? Fintech is a word that is a combination of two different words which are financial and technology. Fintech is created by technology, innovation, and change in the business and banking sector. Fintech can make many transactions such as mobile banking, making any investment, making a loan application, and cryptocurrency. Fintech is made to make business and transaction more accessible and faster to the general. Fintech can easily make any payment or transaction without going to the bank. In Malaysia, many applications can be used to make payment or any transaction at the business place such as PayPal, Boost, GrabPay, Touch and Go, and other apps. Why fintech matter to the entrepreneurs and business world in general? Firstly, the use of mobile payment services. Mobile payment is a financial transaction when a product or services is purchased using a portable electronic devices such as a tablet or mobile phone. People choose mobile payment services since they are more easy and convenient for them. Many customers have increased their reliance on the internet shopping platform to make purchases. Secondly, an increase in the company's sales. Due to its global accessibility, it may be accessed by customers globally online so the entrepreneurs can sell to people from all over the world. Nowadays, many online shopping platforms are used for business. It will help the entrepreneurs raise their sales by widening their sales scope. For example, Lazada, Shopee, Shein, and others. Help the business to access funding and support the company growth. Cash flow is the most critical factor in every business growth. Fintech has enabled businesses to receive the money that they need through online lending that is more convenient and faster than traditional financial institutions. Fintech startups bring technology and transparency to the table that banks do not. When the company has access to cash flow, it can act quickly and seize opportunities before other competitors take the chance. Next, make the transition to digital accounting. The cloud is a computing platform that allows internet to access to data and software from any devices at any time. By implementing digital accounting, business owners can maintain contact with their data and accounts. Cloud accounting software is a prudent investment if you want to help the organization work smarter and faster. How fintech changed the behavior of banking consumer. Firstly, the use of mobile banking to make installment. Fintech make any transaction can be made quickly, faster, and from everywhere through mobile banking. Before fintech was established, people need to go to the bank to do any transaction, but now people can transfer funds to other people at home. This method can help people to save their time and not waste their energy to queue at the bank. Fintech also provide international transfer without going to any bank branch. Hence, fintech made people more favorable to use it and change the bank customer behavior. The bank consumer account. The bank provides their customer a bank book to see the customer had made their transaction. Fintech can help the customer to check and update their account everywhere and anytime. People decided to digitize bank account to allow customer to acquire bank industry services provided by fintech company and new challenger banks at lower cost, which was beneficial to individuals and businesses. Hence, fintech gained more attraction and interest from the community and businesses. This led to a change in a behavior of the bank customer. Next, lending notes for the business. The requirement for loans have been high and complicated for the customer to fulfill, so the customer does not have many options to make the loans. Before the FCA implemented law, there was no limit on payday loans interest rates or fees, so many borrowers have massive loans that have adversely harmed their credit score. Last but not least, loan on a mortgage. A combination of rigorous regulation, high value, long term loans, and extensive application processes make mortgage one of the most difficult essential banking services to disrupt. Mortgage made through fintech companies have gained popularity due to its digitalization, which has converted the process from a lengthy and inefficient paper-based one to one that is more efficient, transparent, and speedier. While online mortgage platforms have eliminated the need for in-person interaction with mortgage broker or banks, the Federal Reserve says traditional lender remains the market dominant power. That's all from me. Thank you.
Now I will continue the slide with advantage and disadvantage of the fintech and the action or strategies taken by Bank Negara Malaysia regarding fintech. The first advantage of fintech is fintech help to democratize economy. Not everyone has the opportunity to participate in the economy or gains access to the same economic opportunities. It is sometimes the result of perception, but most of the time it's just a game of chance. The community and time of birth, as well as the health of the surrounding economy, limits your option. Secondly, fintech encourage transparency. To put it mildly, the financial industry is rife the contentious, innovative. Rarely we do see advertisements such as the infamous Panama Papers that explain why going on behind our back. Nonetheless, the global financial climate is so complicated that there are numerous locations to hide your unethical action, and there are simple not enough people to connect all the of the dots. This is why, in order to discern modern model to harm or atypical behavior on a measure that is truly behind the impact of individuals, we are currently analyzing innovative instruments. The lastly is fintech generate the revenue. Fintech is perhaps the most apparent of them, but it has the potential of generate numerous sums of money by lowering the cost of trading with capital or by developing new outlets and markets. A fintech software development firm exists as so-called non-bank individuals in joint to social economy provide access to credit and demand for contractual conditions. The advancement of commercial technology has an impact on almost every aspect of life and business, and the potential of wealth creation appears limitless. It is all about living a more efficient life. Next, the disadvantage of fintech. First, some people personalities are left out. They will be lost as a result of every technical change. The nature of this loss with fintech is likely to be fairly different, but merchandising is critical. Of course, individualization is a cause of concern on all fronts. With the advancement of the machine learning and robotics, it is becoming increasingly likely that the demand for human labor will decrease drastically. Secondly, it has the potential to contribute to a global imbalance. The problem is that a large portion of the world population lack access to broadband. The thought of owning a smartphone or paying the internet access is ridiculous in some nations. This means that the individuals who live in the displaced will miss out on any of fintech's cost-effective advantage. The lastly is it has a potential to jeopardize privacy. Fintech today frequently only work because it is substantially digital our way of life. When you use an app like Uber, you gain a lot of information. Those with access to your financial information might also acquire a picture of your action, which is even more important. There is a long list of legal and certain activities that should not be written down from purchasing others' pleasure to donating money for specific objective. Now, I will continue the action or strategies taken by Bank Negara Malaysia regarding fintech. Firstly, promoting a progressive and inclusive financial system. The bank is dedicated to developing a progressive and inclusive financial system that the best suit Malaysia's economic needs. Despite the obstinate of managing and responding to the endemic bank continued to extend the financial sector development in 2020. The goal was to speed up the digitalization of financial service, defense financial market, improve access to credit and financial inclusion, and strengthen financial resilience. Second, increasing the speed with which financial services are becoming more digital. Digitalization would make it easier, faster, and less expensive for consumers and businesses to access services and manage their finances. Recognizing this, the bank works to ensure that our law respond to digital developments that aim to better serve communities while also ensuring the financial institution appropriately manage the risks that come with them. Thirdly, extend access to finance and financial inclusion. Financial inclusion is essential for a more equitable society. The academic highlighted the importance of assisting and protecting underserved groups in society, particular those who are disproportionately. As a result, the bank has continued to take proactive measures to promote financial inclusion. That's from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Aryani binti Abidin and my matrix number is 286066. Now I will continue the presentation and explain a little bit about international fintech company that our group has chosen, which is Stripe. First of all, Stripe is an Irish-American financial services and software private fintech company. Stripe was founded by Patrick Collison and John Collison, who are also known as Collison Brothers, in 2010. Patrick Collison is the co-founder and the CEO, while John Collison is the co-founder and the president of Stripe. Then, in September 2011, Stripe was launched publicly after receiving investments from venture capitalists like Peter Thiel, Square Capital, and Andreessen Horowitz. Stripe Fintech Company is a technology-based company that offered products and services through online platform. Nowadays, internet platform is the best choice for those who wants to expand their business. And because of that, Stripe has offered products and services that enables the sellers and customers to send or receive the payments through online. For your information, Stripe is the most valuable private fintech company in America and the second most valuable startup in the world. Next, there are 5 types of products and services that are offered by Stripe. Firstly is the direct payments. Under direct payments, there are online payments, invoicing, which means one-off payments, billing, subscriptions and recurring payments, and terminal, in-person and omni-channel payments. Next, under multi-party payments is Connect. Connect is a new version of payment service that permits payments with credit cards accepted by any website. Then, Stripe also have Payments Link under pre-built components. Payment Links is a no-code payments that just require a few clicks and the sellers can share the link for the payment with the customers. After that, under business operations, there is radar for fraud and risks. Sigma for sellers to custom and analyze their business data reports, Atlas for those who want to build or start up a new company, and automatic tax calculation and revenue recognition for accounting and business financial statements. Lastly, for products and services by Stripe is financial services. Financial services contains issuing, card creation, corporate card spend management, and capital business management. After that, there are four rules for rules and regulations in Stripe. Firstly is request 3Ds. The system will provide 3D secure to customers for authentication. Payments such as Payments Intense API or Stripe Checkout needed requested 3D secure authentication from customers. Next is allow. Allow rules apply to all new payments. This rule's job is to permit any payment being processed after past the first step. Then there is block rules. Block rules will block any payment that has an element of deception. Lastly, there is review. Review rules is a manual observation as an extra layer for fraud protection. Review rule jobs is to review the history of the transaction that had been done and successfully accepted. Lastly, I will explain a little bit advantages of Stripe. Stripe helps to ease the business of customers in making a purchase and payments through their products and services. Their secure and safe payment gateway has gained the trust of customers to use their products and services to do online shopping. Furthermore, business sellers also get many benefits, which is they can expand their business to a wider area. It is because Stripe is available in almost 26 countries across the world. This means the chances for their products to be noticed will be higher. Other than that, their products and services like Sigma help the seller to track the payment data.
Assalamualaikum, I'm Nur Amalina binti Cik Abdul Wahab. So I will continue the presentation with a Malaysia Fintech company which is Axiata Digital. Axiata Group Berhad is one of the largest companies in Malaysia. Axiata Digital is subsidiary under Axiata Group, which best known in Malaysia for its brand Celcom. In January 2015, the company was led by Hairil Abdullah and appointed as CEO of Axiata Digital Services. The vision of Axiata is to become the next generation digital champion by 2024. The Axiata company has four main goals, which are also known as 4Ps to define their success. The 4Ps stand for performance, people, partnership, and planet and also society. For performance, Axiata wants to be one of the Asia's largest telecoms and tech group in all financial metrics as they grow in market capitalism and also generate strong return on invested capital. For the second P stand for people, which is to be recognized as one of the top talent brands, and they also want to be known as Asian Talent Factory. For partnership, Axiata want to be the first choice for partners and also customers. After that, for planets and also society, Axiata plans to be recognized as a responsible digital champion for creating a digitally inclusive society in future. For product and services, Axiata Digital provide a lot of product and services. First of all, Boost Apps. Boost Apps is an e-wallet which people can use to pay for things without using any physical cash. This app is secure and rewarding. Boost App has a lot of partner bands, which is 17 bands. Boost apps can also provide a lot of amazing rewards to users, such as cashback, vouchers, and also promotions. Boost can be used when people want to shop, watch movies, travel, and so on. After that, Axiata Digital also provides Aspirasi. Aspirasi is one of the newest digital financial services brands. The main mission of Aspirasi is to provide opportunities and access to financial services to the consumers in Malaysia, Indonesia, and also for underserved MSMEs. After that, Ada is one of the companies that can analyze data and they can solve a lot of problems in digital, analytics, and also marketing. Ada has a strong relationship with top brands to make sure that their digital and data can be more successful in future and at the same time they can achieve their business goals. Ada was operating across 9 markets in South and Southeast Asia. For rules and regulation, Axiata Digital uses applicable laws to process users' personal data by collecting, holding, storing, recording, using, and disclosing it. All the activities are based on their trust principles, which T stands for transparency, R stands for rights, U for use, S for security, and T stands for transfer. They are transparent about how they collect and protect users' personal data. Axiata Digital respect user rights as individuals for controlling their personal data. They also use user personal data for some purposes and any important things. After that, for security, they establish strong cyber security practices in order to protect all users' personal data. So, users' personal data will be always safe and more secure. After that, Axiata Digital also use the term of use, which is agreement or terms. For instance, users need to accept all the agreements when they visit any website of Axiata Digital. If users do not agree with part or all of the provisions of the agreement, users cannot continue to use or access the website. There are a lot of advantages of Axiata Digital. First of all, Axiata Digital provides some services that can give a lot of benefits for people around the world. For instance, Axiata Digital operates some brands which are both and also Aspirasi. As we know, both Aspirasi and Bose are quite famous in Malaysia since there are a lot of people using these apps. We know that Bose is an e-wallet which people can use to pay without any physical cash, while Aspirasi can give a lot of benefits to consumer in Malaysia. After that, Axiata Digital also have a strong security and protection in order to protect users' personal data. They protect all their users' personal data by using applicable law.
Hi, I'm Sharmin. Today we're going to talk about the future of fintech globally. The first one, from product to consumer. Finance is much simpler than one might think. There are factories that make product, banks holding deposits with interest rates, or investment managers making investment funds, or lenders and insurance underwriting some customers' risk with capital. Then there are stores that sell the product, bank branch, final advisors, insurance salespeople, or lending officers. Between these two extremes are complex value chains of humans, balance sheet, and software woven together by regulation and industry habits. But at the end of the day, clients visit a store and buy some financial products. The second one, the impact of dictation. Dictation is happening all along the value chain. In the front office, consumer relationships are moving out of physical conversations and into cell phones. Examples include European new banks like Revolut, American robo-advisor like Bitterment, and Asian insurtechs like Ping An. Raw automation is being applied to the process of accessing, onboarding, and serving the customers. More speculative interface use machine learning, natural language processing to generate chat and speech instead of letting people interact with live agent. The third one, direct to consumer fintech. Investors like SoftBank have put billions of dollars into direct to customers fintech companies for the chance to serve the currently unprofitable millennial customer. Many mobile apps have millions of small accounts as their clients. Traditional finance investors are skeptical that the economics of this business can work in the long run and return capital. From customer to platform, digital point solutions are a fine start, but they are not the destination of our fintech journey. When you need to buy aspirin for a headache, you don't go to the aspirin store. You go to the supermarket or the pharmacy, which has 1,000 of products on offer. Similarly, today's social and e-commerce platforms offer thousands of features to their clients. The fourth one, from customer to platform. Digital point solutions are a fine start, but they are not the destination of our tech journey. When you need to buy an aspirin for a headache, you don't go to the aspirin store. You go to the supermarket or the pharmacy, which has a thousand of products on offer. Similarly, today's social and e-commerce platforms offer thousands of features to their clients. The fifth one, data aggregation. The advent of financial application programming interface powered by data aggregation sites in the US and regulatory mandated PSD2 in Europe and enable banking and investment data to travel across different destinations. Financial companies that they rent their license, charters and balance sheets to tech companies have been built as a bank as a service. They enable any distribution experience to include relevant financial capabilities. Next, I'm going to talk about the future of fintech in Malaysia. The first one, more talent needed to keep pace with growing consumer demands. To keep pace with growing demands, financial institutions have been ramping up their efforts to partner with local fintech companies and enhance the former's capabilities in Know Your Customers, which is KYC, processes, anti-money laundering and digital identity management, which encompass facial and voice recognition. The collaboration will ultimately result in enhanced blockchain-enabled remittance services, online loan processes, digital wallets, and wealth management. The second one, industry crossover address the fintech talent shortage. As well as homegrown youthful talent, employers are looking outside of regulator circles, while financial services have historically been quite conservative. Malaysia's fintech arena is seeing a change in the past year where companies are attempting to attract candidates from other fields. We are seeing even those without IT backgrounds attract to the opportunities entailed in these offers. These newcomers to the industry are trained by the financial stakeholders, allowing them to fulfill their potential in spite of their lack of industry history in their industry. And it is not just those at home, but Malaysians who have been educated or working abroad are being encouraged to return with government subsidies. This increasingly open door policy that has been seen in the past 12 months is expected to continue into the next year. The last one is more firms will focus on employer branding to real adapt talent, defying traditional and HR practice. The jobs market is becoming increasingly active, leading financial organizations to find less traditional, more unorthodox ways of attracting candidates. Rebranding is one of with many companies painting themselves as media savvy and digital centric, setting up separate fintech branches to increase their brand market share. As banks in particular continue to do this over the next 12 months, they can see their brand identity grow with that brings up to the attention of desired candidates. Thank you. In a nutshell, the findings of this study suggest some points that might benefit different constituencies of stakeholders to enhance their customers' intention to adoption of fintech. Corresponding to the findings, financial services providers or regulators can use these findings as a guide to encourage customers' participation in the use of fintech in the application of financial service. As such, financial service providers should design and offer consumers a technological tool in which it should be user-friendly, efficient, and effective in performing its tasks. Moreover, financial service providers should integrate their technology with greater interaction among peers in order to promote participation in fintech. That's all from me. Thank you.